Hi everyone, I'm Ryan Dietrich and welcome to the Carson Investment Research Midyear Outlook Highlights. What a year it has been. You think about this midpoint year where we are. The S&P 500 is having one of its best starts to a year ever. The NASDAQ, best start after 6 months in more than 40 years. The NASDAQ 100, think the large tech names out there, best first 6 months ever. And that economy that we're hearing so much about, a recession, fortunately, we haven't seen a recession at all, in our opinion, and the economy looks pretty good. Now, if you remember 6 months ago, we were one of the few places that were saying, you know what, stocks can do pretty well this year. We thought the S&P 500 could gain between 12 and 15% this year, and we said there'd be no recession. Now, we're like over 15% already, okay? But the good news, you look at the economy for a second. I'll tell you our views on the stock market here in a second. Let's start with the economy. You look at the economy, the consumer continues to be really strong. That's one of the reasons we didn't see a recession coming this year, because the consumer was still strong, employment was still strong. Now look at housing and manufacturing. Both of those were detractions from GDP recently. All of a sudden, we're starting to see some really strong numbers out of housing. Permits, which is a leading indicator, permits have really improved. Just know that. So housing could be a tailwind versus that like a headwind like it's been really the last 8 quarters or so. Manufacturing showing signs of bottoming as well. All in all, is the economy perfect? No. But the economy really looks like it wants to start to grow here the second half of this year, avoiding a recession. Let's talk about the Fed for a second, then I'm going to finish things up talking about stocks and bonds. The Fed has had one of its most aggressive rate hiking schedules we've ever seen, from rates virtually at 0% all the way up to 5.25%. They're very, very close to being done hiking rates, and that's a good thing. If you look at the last 10 times, everyone, the Fed hiked rates, when they paused, 1 year later, the S&P 500 was higher 8 out of 10 times. Yes, there are a couple times stocks were lower, but the truth again is the economy is pretty good. Inflation is coming back significantly. The Fed is likely done hiking. All of these things, which were headwinds last year, can be tailwinds now, and that's one reason we think stocks have had such a good first half of the year and likely can have a good second half of the year. Let's talk about bonds for a minute here. Bonds had a historically poor year last year. We came into this year underweight bonds, thinking bonds wouldn't do quite as well. We thought bonds would gain about 4 to 5% this year. At the midway point, they've gained about 2%. So they're kind of right there. Again, we still think the opportunity lies with stocks, which will finish up the discussion looking at stocks here. We think the S&P 500 can gain up over 20% this year. Would you think about it? Well, we're already up 17%, so it sounds like a lot. It's not that far away. An all-time high on the S&P is only 6 or 7% away. We think with some good news, we could hit an all-time high on stocks here sometime the second half of this year. And I'll leave you on this. When you look at years that gained at least 10% on the S&P for the S&P 500, like this year did, the median return the final 6 months is actually 10%. Years that gained at least 10% that were negative the year before, so think of it like a big slingshot, right? Those next 6 months are up even more, higher, well over double digits and higher the majority of the time. So the bottom line is this: there have been a lot of negatives out there. There have been a lot of worries and a lot of concerns. We think this economy is going to continue to move higher. We think earnings are going to start to really improve here. We think we're going to avoid a recession, and we think stocks can continue to do well. We are focusing on small caps and cyclicals to do well the second half of this year. Tech did amazing. We think maybe tech comes back to earth a little bit, not the end of the world, but the broadening out of this bull market, which is the lifeblood of a bull market, passing that baton around, we think makes a lot of sense. So it's been a good start to the year. We think the second half is going to be pretty good as well. I appreciate everyone listening. We'll see you next time. Thank you.